since we were discussing this entire theme of capital markets related stocks, how are you looking at it currently? Right now the markets are volatile. We do know in the last 1 year, the equities have not done too much. We're just about 4-5% higher in trade. In fact, in contrast, we've seen and we've discussed with you before also, commodities like gold and silver have outdone equities, by a huge margin. And this is for the second year in a row as well, when we've seen such a substantial move. I even remember speaking to a lot of people last Diwali and asking whether gold can continue to shine, and they were very apprehensive and saying that, we don't know if a same kind of a move can be seen. But this time it's even outdone last year's move as well. So, how are you looking at both the capital market opportunities at this stage, and how are you looking at the gold related opportunities? Muthoot has come to a record high level there on the back of gold financing. So, how are you looking at opportunities?
Yeah, so Sakshi, the math is simple and which is absolutely boring. So you put 33% in equity, 33% in debt, and 33% in gold and silver. And believe me, you can beat any higher allocation in equity. We have a matrix over here in which if 70% is allocated to equity against 30%, the difference of return is just 2%. Okay. So it's like 70% equity, 20% debt, 10% gold and silver against 33% equity, 33% debt, 33% gold and silver. The difference of return is hardly 2%. Sakshi, when you're talking about a marathon run in silver and gold, we have discussed this at length in past, so we'll not discuss it again. But see, what viewers need to understand is that the down cycle takes 6 years average. Okay, so for an example, as of now, if the gold is making a top or in the process of top, I don't know, I'm just discussing it. So if, for an example, in next 6 months or 9 months, gold is topping out, then believe me, Sakshi, to get this rate, it will take 6 years. Okay, so gold is a cycle of 6 years. So be absolutely careful, and there has to be a split between two. First is an investment view, and second is the purpose with which you are buying the gold. So that is how it works. So we are of the view that at any given point of time, if you want to treat this asset class into your portfolio, SIP SIP is the best option because the waiting period is too long. So don't get excited with 1 or 2 year return, and don't allocate higher capital over there. It is going to be a big mistake. Coming back to the point of return, Sakshi, right now I think the high beta stocks are making a comeback. So in case of, like, if you look at the chart pattern of Suzlon, if you look at the chart pattern of Yes Bank, if you look at the chart pattern of GMR Airport, I mean, all these stocks are looking phenomenally great on the charts. And we are of the view that going forward, this small ticket charts which are there in the FNO space will likely to outperform. I mean, as you rightly pointed out, that I mean, it is difficult to recall this name of the IPO because it's too much of a rush, right? Right.
Yeah.
So sometimes you are completely off the track saying that if the primary market is buzzing like anything, even you don't remember, even I mean, whatever capital you are sitting with, you fed up, applying for the IPO right now. That is the kind of number which is coming on the street, right? So the point is that market is not at an all-time high, but since the primary market is buzzing, so we are expecting, and which was our earlier expectation as well, that during the Deepavali time we may hit a fresh high. So, Sakshi, I think coming back to the investment theme, you should and must concentrate right now only on the agri commodity and the commodity cycle. That's what we have been discussing since last 6 or 9 months. And I think metal will come back very strongly, Sakshi. So all the eyes are on Hindalco, Nalco, JSW, SAIL, and Tata Steel.
If you like the video, do like, comment, share, and subscribe.